Good afternoon, everyone. This is Kevin, and we are Inside China Business. I have over 30 years of experience in the asset management and investment industry. I started off when I was about 19 years old at J.C. Bradford. I worked in the municipal bond department there. J.C. Bradford later became part of Paine Webber. I went to Paine Webber, and I was there too. I spent several years at Principal Financial Group, managing pensions and investment funds. I then moved to Smith Barney, which was part of Citigroup, and then it blew up and was taken over by Morgan Stanley, which also needed a government bailout. I spent several years in a smaller investment firm, and I then went to private equity. And I've been in the private equity business for about 15 years. And I've had a good view all this time of the idea that just because a company is a professional investment manager doesn't really mean they know what they're doing a lot of the time. Many of the companies I worked for needed government bailouts at some time because they mismanaged their investments so badly. When making investments, especially making investments abroad in an unfamiliar market, it's really important to understand the cultural and the legal and the governmental differences between the system you're coming from and the system you're putting your money into. For example, I'm an American. In the United States, if you buy a piece of land and later you find oil or gold or coal on that property, it belongs to you. Everything on your property belongs to you. What sits on the property, what's under your feet, all the way to the center of the world, it's yours. Now, in other countries, that's not quite the case. They say that oil was there before you got there. That oil was there before people came here. So that is a natural resource. And because it's a natural resource, it is also a national resource. I disagree with that point of view, actually. But two things. First, I appreciate that somebody who is reasonable and rational could reach that conclusion. It's not a crazy point of view that just because I have a piece of property and somebody finds oil on it, it should be mine. I understand how a person thinking logically could arrive at the idea that it should be the people's oil or the government's oil. The second point is that before I go around the world buying up pieces of land, hoping to find oil under it, I need to have a good idea whether I'm going to be allowed to keep it. I need to understand the culture and the governmental regulations there regarding such an investment. Because if I don't, I might lose a lot of money. Starting about 2 weeks ago, the China stock market ended a very long decline and started bouncing back a lot. And this came after news that over 75% of the foreign buyers had sold their positions and left the Chinese stock market. And that the China government itself, along with some national funds, were the ones buying the stock at that point. To summarize, money managers and hedge funds on Wall Street were selling as the market declined by about $6 trillion or so. Then they sold out finally in what's called a capitulation trade, and the buyer was the China government. I realize that Wall Street has been doing capitalism for a long time. And I realize that China has not been doing capitalism for a long time. But isn't buy low and sell high still a thing? I mean, don't we learn that the very first day? So why is it these Wall Street hedge funds and investment funds were buying from Chinese investors at the top, selling as it went down, and then got completely out of the trade at the very bottom? Who was the smart money in these trades? It seems to me like the smart money was the Chinese investors who sold at the very top, and the Chinese investors and national funds who bought back in at the very bottom. So how did this happen? What is the most common complaint about Chinese companies? That they tend to copy what other people are doing. They study other companies and other countries, and they emulate successful things those companies and countries are doing, and they do it for themselves. And they see things that are not working very well, and they reject those. I've never really understood why that's a character flaw or personality defect. I mean, isn't that what we do? When we study a biography of famous, successful people, that's what we're doing too, right? We're trying to copy the things they did and learn from their failures. But never mind. The Chinese have studied extensively the Western style of investment management. They've studied Wall Street. They've studied London. They've studied the currency and stock bond markets from around the world. And one of the things that they do not like is how Wall Street dominates everything. In the United States, we point to Wall Street as a barometer of how the entire country is doing financially. Are kids living in their cars because they cannot afford to rent an apartment, or they're graduating college and moving back home with their mom and dad? That's great, because Wall Street investment funds have a lot of rental properties, and they're up double digits on the year. Are a huge majority of Americans one paycheck away from insolvency, from losing their homes? Yes, but it's okay, because the S&P is having another great year. When are we going to realize that the reason Wall Street has great record-breaking years, it's because Main Street is being bled dry? And what's going on in Washington? They will borrow $3 trillion this year. They borrowed nearly that much last year, and nearly that much again the year before. And we're happy. We're celebrating because they're able to borrow all this money without yields blowing up. When are we going to realize that that is trillions of dollars that should have gone into the productive economy? Lending for new businesses, lending for young families to buy a new home. When are we going to realize that it's Washington and Wall Street, big government and big finance, that is strangling us to death? And instead of lending money to young people so they can start new businesses, we lend to the federal government. And instead of putting equity into new businesses, we buy the same big stocks that everybody else is buying. And China says, if that's what capitalism looks like, that's not what we want here. So what has the China government said? They put out these documents called guiding principles, and they also have these 5-year plans. And they're actually quite clear. There's no ambiguity to them. And what they say repeatedly is that they hate property and stock market speculation. So this idea that Chinese investors can take productive capital and buy 2 or 4 or 24 apartments and just wait for the price to go up, the Chinese government is deliberately bankrupting all those people, along with the companies that lent them the money to do it. The China government also hates stock market speculation, especially when you're using borrowed money to do it. starting about 8 or 9 years ago, they started deliberately bankrupting those people too. The finance companies that would lend money on margin so that speculators here could dabble in the stock markets. If you are a Wall Street hedge fund, you are a speculator by definition, and they don't want you here. Suppose that you're a stockbroker or a wealth management advisor in the United States, and somebody like me walks into your office, a middle-aged man, and I say, I want to save money so I can have a comfortable retirement. And you say, okay, take $300 or $3,000 a month and invest it in a big basket of large capitalization stocks. Starbucks, McDonald's, Coca-Cola, Amazon, Disney, all those. And you'll show me a projection that says that in 20 years I'll be a millionaire. And that would be what your recommendation would be. And you'd be right. That would be a good recommendation. And it's a good recommendation for you too, because you would be paid an asset management fee on that money, even as it grows, when honestly I could do it myself just by buying some ETFs or a good mutual fund. But is that really the best thing to do? I'm a middle-aged guy with a lot of experience. I know a lot of people. I've made mistakes that I will not make again. So might not it be a better thing to take $3,000 a month and invest it in new companies in my neighborhood, locally? Wouldn't it be better for me to combine some money with some of my friends in the same position? Invest in a small business and hire some young people who will eventually take over that business and run it themselves. Would it not be better if instead of buying Starbucks stock, I loaned my money to some young kids in my neighborhood who wanted to open a coffee shop? Instead of buying shares in McDonald's, I helped a group of kids open a hamburger stand on the beach near my house. Isn't that better? Because in China, they want you to do that. They want you to do the second thing. They want middle-aged people with capital to invest their capital in their local communities, into the people who live in those communities, to help their local economies develop and grow. The big public companies, the richest companies in the world, they don't hire anybody. What's the first thing that happens when two large companies merge? The very first thing, they start laying people off. Whenever a large company buys a smaller company, what's the first thing they do? Start laying people off. Small companies hire. Small companies grow. Small companies are the lifeblood of a local economy and even the national economy. And this is something we used to believe in the United States too. If you wanted to know how the economy is really going, ask 1,000 small business owners. They'll tell you. If you want to know how people are spending discretionary income, how good is the economy for that, just ask the guy who has a bowling alley or somebody running a neighborhood babysitting service. They'll tell you. You don't need reports from the US Treasury. You don't need publications from the wirehouses to tell you how businesses are going. Just ask small business owners. But we don't do that anymore. It's a lot easier to put a talking head or an investment analyst on TV. Of course, he thinks the economy's great. He just convinced a whole bunch of new clients to give him all their money so he can invest in the same big company stocks he always has and buy the same government bonds he always has. And meanwhile, everybody watching the show is wondering, if the economy is so great, why is it so bad? There is a theme that the Western media covering China almost always gets wrong. There's a saying here in China that the tallest nail gets The tallest nail gets hammered down. That's what it is. And whenever the Chinese regulators come and break up a major company like Alibaba, analysts in the West assume that the government's trying to take it over so they can control the industry or they can control the company. But that doesn't even make sense. What's easier to control? One large company or 10,000 smaller ones? What's easier for the government to regulate? One company like Alibaba or the 5 million small companies that make up the ecosystem of electronics and e-commerce here in China? Obviously, when you have millions of companies doing their own thing, that's impossible to regulate. But what they know is that those companies are growing, they're hiring, they're innovating, and the big companies don't. And what's more, I'm curious how it is that the Chinese have figured that out and we have forgotten it. We used to believe that too. When I was growing up, nobody cared what the stock market did. It wasn't even mentioned on the news. Now it leads the news. So now we have this. All these Harvard MBAs who run investment funds in New York, hedge funds in New York or wherever, they came into the China market, they lost a lot of money, and now they've left, and they're putting out press releases saying that the China stock market is uninvestable. They took positions by buying stock from large Chinese investors and individuals. The stocks then fell. Then they fell a lot. Then they gave up and sold, and the buyer was the China government itself. And these articles here, the press releases they put out, the Wall Street guys are still pretending like they were the smart money. As usual, they're lying to themselves and they're lying to us. What would have been smart is to see what happened 2 weeks ago when the China government started scooping up shares. And they were advising their pension funds in China to start buying shares. And that's when you realize that's the bottom. Buy low, sell later, just like we learned in kindergarten, instead of doing it the other way around. Thanks for watching. Be good.